metrics.
Well, you mentioned something that will probably catch some Bitcoiners off guard there, this idea that Bitcoin is correlated in some way to the gold price.
Okay.
Somewhat
Yeah.
uncomfortable, right? Bitcoin is digital gold.
Yeah.
In some ways, we're pegging our projections for Bitcoin's market cap
Yeah,
on
to that,
gold. What's the relationship here, and why are you looking at gold as a factor?
So a few things. I think the biggest thing, so of course, as I said, liquidity, that's kind of debasement of currency, right? So you do that, anything that's scarce is going to have to go up, right? So that's why real estate, stocks, gold, Bitcoin, it all goes up whenever we debase currency. So like there's a clear, in my opinion, correlation there. That's the M2 meme. I think the other correlation is, especially what's happened over the last few months with so much uncertainty, potential war, potential tariffs, et cetera. When you look at what's going on there, everyone was kind of fleeing the dollar. They were fleeing U.S. equities, right? We didn't know what was going to happen with companies like, let's say, Tesla or Microsoft or whatever. So companies were trying to get out of U.S. equities, trying to get out of the U.S. And it's like, where are they going to put their money? There's not a lot of other good options. And so whenever you have uncertainty, money tends to go into gold. And I think we're finally starting to see, I think this was really the last couple of years here, really I think it started in 2023 when we had that sort of like mini banking crisis in Q2. You saw Bitcoin rip when you had that banking crisis. And I think whenever you have uncertainty, you're starting to see Bitcoin become the, let's call it like risk off asset, right? Everyone always sees it as a risk on, which it is. There's that 20% speculation part. There's the currency debasement part. But I think Bitcoin's actually becoming both. It is both a risk off and a risk on one. So when you have these uncertain moments, Bitcoin usually pukes because these things usually happen on weekends and everything else is closed.
Well, it's market psychology, right? So for people who've been in Bitcoin for a long time, maybe a decade plus, maybe to them it's digital gold. Somebody who's just coming to the market, is it digital gold for them? Probably not.
Yeah, exactly. I just think like whenever, like I remember when all the tariffs happened, I was like, okay, where am I going to put my money? I don't want it in American stocks. And it's like, where else are you going to put it? And Bitcoin was literally the only answer in that moment. And so I think that's kind of what the boomers have for gold. And so I think Bitcoin is beginning to take that over for gold. And so I don't think that Bitcoin is going to, only get to whatever gold's market cap is. I think it goes way beyond that because it is better in so many different ways. And so I think right now, a lot of the TradFi world that's beginning to allocate to Bitcoin is seeing it, as you said, digital gold. And so like they kind of see, oh, gold moved, Bitcoin should move, they'll buy it. I think eventually we'll surpass that. And gold, I don't know, will that remain?
You had this idea about gold-Bitcoin ratio. What is this? This is just the trading pair of Bitcoin to gold?
No, so this is the gold-copper ratio. Is this the one you're referring to?
Yeah, okay.
So this is around the business cycle.
Because this is a very obscure ratio. I don't know if there's many people out there who are following the gold-copper ratio.
Yeah, absolutely. So the gold-copper ratio is really, if you think about how the business cycle works, which again, the business cycle is just like how well are our economies functioning, right? They kind of go up and then they go down. Usually we go up because we're printing money or rates are low. Then we tighten rates.
Hopefully people will be getting more productive, but
or that, yeah.
Really.
The problem is in this world is we have an aging population, and so we're getting less and less productive, except for technology, right? So hopefully, as you said, we will get more productive. We won't need the money printing, but that's a long ways away, I think. And so we have these kind of ebbs and flows in the economy. And what you see is that when the business cycle is picking up, gold tends to start to lag and copper picks up. Why is that? When you have a lot of demand for
people
consumption.
building houses.
Exactly. You need copper to do basically everything, right? You want to build phones, you want to build GPUs for AI, you want to build whatever. When there's a lot of consumption, you need copper. So copper tends to outperform in the later stages of a business cycle, and gold tends to start to lag at that point. In the early stages of a business cycle, where there's still a lot of unknowns, there's a lot of uncertainties because you're not sure, the economy's not doing that well, gold tends to outperform. And so when you see copper start to outperform gold, tells you you're getting to the later stage of the business cycle. Usually that's a more risk-on environment. And so you'll start to see tech stocks, you'll see Bitcoin do well, but you'll even start to see like a lot of the shit coins start to do well because that's just when people start to get more money. So that's one of the metrics you can look at for the business cycle. You can also look at like the ISM. There's a bunch of different things you can do. But the business cycle is a big guider for me in at least our investment framework. And the gold-copper ratio kind of helps that.